We do most of the non-cash payments in South Africa. So we connect all the banks together and allow them to serve their customers well. So it's the plumbing, if you like, for the financial system. And in terms of getting the basics to work, that's kind of what you need to do. One of the challenges in Africa is that type of plumbing is not in place in every country. And so to be talking about building lots of sexy new fintech on top of that is a bit challenging if the plumbing isn't there already. The flip side of that problem is that the plumbing in the developed countries is now quite old. The original design 30 years ago, right? So at some stage you have to think about redeveloping the plumbing as well, which is where I think Africa has the opportunity. It doesn't have to tear the old plumbing out and put the new plumbing in many countries. It can start with the modern stuff. So there's a great opportunity there, but we need to have the conversation about linking everybody together. Right. And the difficulty with a lot of the new technologies is if everybody were to adopt them, they would work beautifully. But how are you going to get everybody to adopt them? That's actually the hardest question. Right. So the biggest loophole in the current conversation is how do you get that consensus?
Right. We had another session that happened, and one of the general sentiments was that we want everyone to trade on the same level and according to their sovereign currency, yes. Right? Their national currency. But we still have countries like Ghana that are still trading in dollars, yep. For example. Sure. Some in the West, and we're not on the same page with currencies, but we want to trade on one possibly African currency or one digital currency. Why can't we see this as obviously as it is?
Look, it's a huge challenge for Africa and a special challenge for this continent. 55 countries, multiple currencies, not quite as many currencies, but still a lot, and a lot of different political regimes. I think the push towards regionalisation is a good place to start in talking about that problem. So the grouping of the Southern African Development Community, the grouping of the West African Community, the grouping of the East African Community, this is a start towards what will be a long process of bringing those policies together. In West Africa, courtesy of the French history, you have actual currency union, but in the other parts of Africa, you don't. So you have two West African franc groupings, which make up about 12 countries. I think over time we have to be working on that model to build stronger African tradable currencies and the plumbing, to use that word again, that goes with those currencies. It won't happen overnight, and it's not about technology. It's about getting different governments and different banking communities to agree how to do stuff.
You mentioned that that's the first stage of this. The toughest bit is not the infrastructure, but getting people on the table, which is what blockchain is doing now, is getting people to speak.
So in developed economies where there are already lots of infrastructure, and South Africa is in this category for this purpose, there's an EFT system, there are well-developed card switches, there is a real-time payment system that was introduced about 8-9 years ago. So that infrastructure is already there. What blockchain makes you do is go, okay, so could I use this technology to do that better than it is done today? And why would it be better? Does it allow more people to connect? Does it reduce the costs? Does it reduce the error rates? How is it going to be better? And I think those are really good questions to be asking, right? Then there's a different kind of conversation you have in a developing economy, because a lot of that plumbing isn't already there, and that's true in many countries in Africa still. So there you can ask, is this a quicker, faster way to bring in the plumbing that I know my economy is going to need? So for us, as an operator of payment infrastructure, it's an article of faith that what we do is help the economy. The purpose of our organisation is to provide that basic connectivity on which the economy can grow and develop over time, right? If we're not doing that, then we're not really doing our job. So in a developing economy, the question for a central bank to ask, or a banking association, is how can we use these new technologies to put in the basic platform on which the economy can grow? It's a hard question to ask because you don't actually know exactly what the economy's development path is. It's all in the future. So you have to build something that's quite open, quite flexible, that keeps the costs down, but actually allows lots of open access so new things can happen, even things you didn't even know were going to happen. That's kind of the fun part.
Now, within an open system, a decentralized system, for example, what's the role of the central bank? Because we're seeing it diminish, but strengthening in other parts, because we still need regulation of players who come into different markets.
So the central bank certainly has a regulatory role. I don't myself think that's the most important role in most African countries. It's a job that's got to be done. The really important part is that someone needs to provide the catalyst for that consensus I was talking about. Someone needs to encourage the industry to come together and have the right conversation. Sometimes, in some countries, that's done without the central bank. So I come from Australia, and in Australia, the central bank is very good at nudging the banks.
Right.
It doesn't actually regulate. It says, we think you guys should have a conversation about instant payments. Right. And we're going to give you some time to do that.
The probable innovators.
Yeah, right. And then the banks get together, sometimes with other organisations like telcos, retailers, fintech companies, and have that conversation. And it's always an awkward conversation because everybody's got slightly different business interests. But the value of having the central bank encourage the conversation is everybody knows when they're having the conversation that if they can't reach any agreement, eventually the central bank's going to get stroppy, is going to get unhappy, right? And so that is an incentive to come together and form a workable compromise amongst all those business interests. And that's a very human process. And if they pick blockchain, that's great, but actually it's the human process that you need.
All right. Yeah. A final question. I don't want to ask what the future of banking is, but I'll ask it, what's the future of interoperability, and what is BankServ doing now?
So we already provide the interoperability for the South African marketplace. Supported, we support the economy, if you will, and subject to the regulations both of the central bank and of the the Payments Association, I should say, in South Africa that provides the self-regulation. So that's a good working partnership. I think we're entering a new era in payments where the problem won't be how do we build a system, the problem will be how do we cope with 1,000 new systems. So courtesy of the internet, courtesy of new technologies like APIs, like blockchain, there's going to be many, many, many payment solutions, and they will spring up wherever there's a need that hasn't been met yet, right? That's good. It's a lot better than having no answers. But the problem is they need to interoperate. Right. The danger in that world is that all of you've got all these little different systems, and the only place they link up is sitting on your own phone. So you've got a dozen apps rather than one app. That's the problem we're going to have. And so the challenge is to interoperate those. How do they connect together so that we give people the flexibility to build the solutions that are going to work, but still keep them somehow aligned so that they interoperate? Because you get a lot of cost and a lot of risk from these things all operating separately.